Last week, my 18-year-old nephew called me in absolute disbelief. He'd found a perfect first car, a 2015 Ford Fiesta for £3,500. Then he got his insurance quote, £4,200 annually. His insurance for young drivers was literally going to cost more than his car. He thought there had to be some mistake, but this is the harsh reality facing young drivers in 2025, and understanding why this happens is crucial for making smart financial decisions about car ownership. Today, I'm going to break down exactly why insurance for young drivers can cost more than your actual vehicle, and more importantly, I'll share the ultimate strategies that could save you thousands of pounds without compromising on essential coverage. Let's address the shocking reality. Can insurance for young drivers really cost more than the car itself? Unfortunately, yes, and this scenario is becoming increasingly common in 2025. According to the latest UK data, the average cost for insurance for young drivers is now £2,217, with 17-year-olds facing premiums averaging around £2,877. When you consider that many suitable first cars for young drivers cost between £2,000 and £4,000, it's entirely possible for your annual insurance to exceed your car's value. To put this in financial perspective, while the average UK car insurance cost is £735 annually, young drivers are paying nearly 4 times that amount. This creates a significant barrier to financial independence and mobility for young people starting their driving journey. What are the fundamental reasons why insurance for young drivers is so astronomically expensive? The costs come down to pure statistical risk assessment, and understanding this is crucial for your financial planning. Insurance companies base their pricing on hard data, and the numbers for young drivers are sobering. Young drivers are statistically more likely to be involved in accidents than any other age group, and therefore insurance premiums reflect that risk level. Here's the key data that drives these costs. Drivers under 25 represent only about 7% of all UK licence holders, yet they're involved in a disproportionate number of claims. The claim frequency for young drivers is approximately 25% higher than for drivers over 25, which means insurers face significantly higher costs when covering this demographic. Additionally, when young drivers do have accidents, they tend to be more severe on average, leading to higher claim values. This combination of frequency and severity creates the perfect storm for expensive insurance premiums. Beyond the statistical risks, what specific factors make young driver insurance costs so high? Several key factors compound to create these high costs, and understanding them helps with your insurance strategy. First is the inexperience factor. New drivers simply haven't developed the hazard perception and defensive driving skills that come with years of experience. Even if you're an older new driver, lacking driving experience still places you in a higher risk category. Second is vehicle choice limitations. Young drivers often gravitate toward older, less expensive cars, but these vehicles may lack modern safety features that could help reduce insurance costs. Ironically, trying to save money on the car purchase can sometimes increase insurance expenses. Third is the higher likelihood of peer influence and risk-taking behavior. Insurance companies factor in that young drivers are more likely to have friends in the car, drive at night, and engage in behaviors that increase accident risk. What are the most effective strategies for reducing insurance costs for young drivers? Let's start with the game changer, telematics or black box insurance. This technology monitors your driving behavior and can lead to significant savings for safe drivers. Some insurers offer discounts up to 60% for young drivers who demonstrate safe driving through telematics programs. The device tracks factors like speed, braking patterns, cornering, and time of day you're driving. Here's what makes telematics so effective for insurance for young drivers. It allows insurers to move beyond statistical assumptions and price your policy based on your actual driving behavior. If you consistently drive safely, your premiums can decrease significantly. The second major strategy is strategic car selection. Choose vehicles in insurance groups 1-10, which are specifically designed to be affordable to insure. Examples include the Volkswagen Up, Peugeot 108, Ford Car Plus, and entry-level Vauxhall Corsa models. These cars have smaller engines, good safety ratings, and lower repair costs. How significant are the potential savings from these strategies? The savings can be substantial enough to make car ownership financially viable. With telematics insurance, safe young drivers can see reductions of 20 to 30% in their first year, with even greater savings as they build a track record of safe driving. Over 3 years, this could save thousands of pounds. Car choice impact is equally significant. The difference between insuring a 1.0-litre city car versus a 1.6-litre hatchback could be £1,000, £2,000 annually. When your insurance already costs more than your car, these savings become critical for your financial planning. Adding an experienced named driver can sometimes reduce costs by 10 to 15%, provided it's done legally with the young person remaining the main driver. However, this strategy has become less effective as insurers have become more sophisticated in their pricing models. What about different types of coverage? Should young drivers choose comprehensive or third-party policies? For young drivers, comprehensive coverage is usually the smarter financial choice, even though it costs more upfront. Given the high accident rates among young drivers, having your own vehicle covered can prevent financial disaster. If you're at fault in an accident and only have third-party coverage, you could lose your entire investment in the vehicle. Consider this scenario. You buy a £3,000 car with third-party insurance to save money. If you're at fault in an accident, you lose the entire £3,000 plus face potential repair costs for the other party. Comprehensive coverage protects your investment and provides better long-term financial security. How can young drivers build toward more affordable insurance in the future? Building your insurance profile is like building credit. It requires time and discipline but pays significant dividends. Your no-claims bonus is incredibly valuable and accumulates year by year without claims. After 5 years of claim-free driving, you could qualify for discounts of 60% or more compared to first-year premiums. Consider protecting your no-claims bonus once you've built up a few years. This costs extra but ensures your discount won't disappear if you need to make a single claim. For young drivers, this protection can be particularly valuable given the higher statistical likelihood of accidents. Take advanced driving courses like Pass Plus, which can provide immediate discounts with many insurers, while also making you a genuinely safer driver. The investment in additional training often pays for itself through reduced premiums. What's the realistic timeline for insurance costs to become reasonable? The good news is that insurance costs for young drivers decrease significantly with age and experience. Most insurers begin treating you as lower risk around age 21, 22, with more substantial reductions at 25. By your mid-20s, assuming you've maintained a clean driving record, your insurance costs should align much more closely with the general population. The key milestone ages are typically 21, 25 and 30, where you'll see notable premium reductions. However, your driving record during these early years is crucial. Any claims or traffic violations can significantly delay these natural cost reductions. What's your ultimate advice for young drivers facing these challenging costs? My honest assessment is that expensive insurance for young drivers is a temporary but necessary investment in your long-term mobility and independence. The key is approaching it strategically rather than just accepting whatever quote you receive first. Budget realistically. Factor insurance costs into your total cost of ownership from the beginning. If the insurance costs more than your car, that doesn't necessarily mean you can't afford to drive, but it does mean you need to plan your finances accordingly. Shop extensively and annually. Insurance for young drivers is a competitive market and different insurers have varying risk appetites. What one company quotes at £4,000, another might offer at £2,500. Never just accept renewal quotes without shopping around. Remember that this challenging period is temporary, and with the right strategies, you can minimize costs while building toward much more affordable insurance in the future. The road to affordable insurance starts with understanding the system and making informed decisions. Your future self will thank you for the strategic approach you take today.